Good afternoon, everybody. It's Monday, the 9th of October. Welcome to our latest Market Mondays show. What a difference a weekend makes. Last week, markets were expecting rate cuts and US markets to slow down. In fact, what we had was completely the opposite. We're starting this week from a very, very tough position. With the Middle East conflict flaring up again over the weekend, and US 30-year yields now touching levels we haven't seen since 2007. So I think one of the main things that we really need to take note in markets like this is bottom-up stock picking becomes most important. I think a lot of passive strategies at this stage are going to be a lot tougher going forward. So identifying good quality stocks, good balance sheets, good management becomes paramount. Today, to start our show, we've got three key ideas that we want to talk about. We've got a very interesting healthcare stock that is increasingly. We've got a very interesting healthcare stock that is becoming increasingly regional, and it's on its way to becoming a key sector winner. We also have a very interesting offshore and marine stock that we think is at the right place at the right time in the cycle. And then we also are going to talk about the Thai consumer sector and what we think about as we go into the fourth quarter, especially after the tragic events of last week. Now, let's start with the market movers as usual. A lot of green from last week, largely from expectation of an accelerated Fed cut coming through with expectations that the US job growth numbers being a lot weaker. That didn't happen, but S&P was up about 1.2%. The NASDAQ was up about 1.6%, largely on the back of those expectations. China was closed, but we saw the HSI up about 1.6%, largely from the tech names. Most of Southeast Asia, except for Thailand, was green. Again, some of the overspill from expectations of a pivot from the US markets to this part of the world. Certainly we are in a very, very different position now, which is why I started this show by saying that it's more important than not to be in a position to be picking bottom-up stocks. Now, when you talk about stocks that we like and high quality stocks, one of the names that we want to talk about is Raffles Raffles Medical. Now they acquired a hospital in Ho Chi Minh, the American International Hospital, recently. We have Eric on the line to talk us through this deal as well as what he thinks we can expect going forward. So Eric, welcome to the show.
Hi, Dylan. Thanks for having me.
Thanks, Eric. Hey, we can't see you. Your camera is off. Now, I just want to ask you, Raffles Medical, acquired this American International Hospital in Ho Chi Minh. Was this a good acquisition, and how will this impact the strategy?
Yeah, Raffles is acquiring a majority interest in AIH for up to US 46 million to be fully funded by its internal resources. Maybe just a brief background. AIH is a purpose-built and fully equipped 120-bed tertiary hospital. It has 5 operating theaters and offer a full range of specialties and essential diagnostic capabilities. So we understand that AIH has seen quite a steady growth in both outpatient and inpatient volumes since its inception in 2018. And as part of the deal, Raffles will also enter into a management service agreement to manage AIH operation. It currently has about 500 staff, including 60 doctors. And so this will enable Raffles to ride on the growing demand for healthcare services in Vietnam and complement its clinic operations there. So although management did not disclose much financial details, but we believe that this is part of Raffles' long-term strategy to expand its income stream and diversify the group hospital operation beyond Singapore and China.
Right. So just remind us, what is the revenue mix now? Is it mostly Singapore and a little bit of China, or?
Yeah, now currently more than 90% is from Singapore. Yeah.
Right. So I mean, I think Singapore is a fairly mature market. I mean, you do have medical tourism, but the market itself is growing slowly. So you need to go into some of the Southeast Asian markets, and in Vietnam, you have very strong rising affluence. So that will actually propel more demand for private healthcare. Now, having said that, one of the interesting things that you've been talking about Singapore, while it's a low growth market, is this whole healthier SG policy. Now, remind us, how does this policy, benefit and affect Raffles Medical?
Yeah. For those who are not familiar, Healthier SG is actually quite a major transformation of our nation healthcare system. So under this scheme, healthcare providers will focus on preventive care, while the government will set up the system, processes, and incentives to support this shift. So from July this year, Singapore citizens and PR, starting from those age 60s and above, can start to enroll for this Healthier SG. They will be progressively invite by the MOH via SMS to enroll with a GP clinics or polyclinics. We understand that so far, over 900 GP clinics has signed on to participate in this Healthier SG program. And obviously, Raffles being one of the biggest primary care providers, we think that Raffles is going to be a potential beneficiary of this strategy going forward.
Right. So long-term structural demand coming from a developed market like Singapore, plus the added alpha coming from emerging markets like Vietnam as well. Now, all of this sounds really good, but Eric, what worries you about this stock?
Yeah, I mean, we see some key downside risks. One of them being the longer than expected break even for its China operation. For the last 2-3 years, the China's hospital has been affected by the COVID knockdowns and disruptions. So management has said that we will see of this 2023 will be their first full year of normal operations. And the second downside risk we see is the potential margin normalization due to the continued efficiency pressures such as staff costs.
Got it. Thanks, Eric. Thanks for that update, and thanks for joining the show.
Thank you.
Now, another stock that seems to have caught the right timing on the oil and gas sector is Dyna-Mac. I mean, I think especially with the current sort of conflict in the Middle East as well, we've already seen a big 4% jump in oil prices. And I think this continued uncertainty will keep oil prices high, especially as two of the major producers, Saudi Arabia and Russia, have been targeting production cuts. So within that view, I want to bring Jarek here, who wrote this really interesting note on Dyna-Mac. Jarek, welcome to the show.
Hi, Dylan. Thanks for having me.
Now, I want to ask you, Jarek, you mentioned in your note that Dyna-Mac's won a few new contracts. Can you give us an overview of what these contracts are and how does that kind of put their overall order book at this stage?
Sure. So basically, they announced, I think, about a total of 88 million Sing dollars worth of contracts recently. The main contract is actually for the construction of topside modules for FPSO vessel. So that's their core bread and butter business. So they secured another contract for a few topside modules for a new FPSO vessel that's going to be constructed at the start of first quarter of 2024 and should be completed by third quarter of 2025. And this will actually the key thing is that this project will actually use the new yard space that they recently acquired. So they actually leased the land from JTC next to their office, and these new projects will be using the new capacity from this new lease of land. And the other contracts actually includes provision of services, maintenance, installation, and fabrication works for other vessels. So with this order, basically its order book has actually increased to about 630 million, and it covers almost clear visibility into FY25. So for your FY25 earnings, it should be rather in the book already if they can execute all this order book.
Got it. So very few stocks offer that level of visibility going into 2025, especially as there's risk of recession, there is high interest rates, and new geopolitical conflicts as well. So that's kind of interesting. But now, Jarek, when I look at the stock price chart though, and you can see that on screen, the stock's up about 133% over the past year. So some investors might be concerned that the re-rating at this stage might be over. What makes you think otherwise?
So yes, I think you're right. I think for me, I think that the reason why I do think that there's more upside is because of the fundamentals. I mean, they are in a multi-year upcycle. Management has not been expanding for a very long time, and this year they actually lease more land for expansion, right? So this is a key sign that there's going to be bigger projects coming forward. Customers are asking them to expand as well. So I think going forward, you are looking at more orders, larger projects, and that will eventually lead to higher profit levels, which I think will be also good for the share price. So I think that this upcycle will last for at least another easily 2 to 4 years, and I think management has that same view as well. And with that, we do think that larger orders, better profits will eventually lead to higher pricing levels for this stock.
Right. I mean, with the stocks pulled back a little bit from its highs, so might be an interesting entry point. What can go wrong with this view?
So I think that what can go wrong is, which is I think of a low probability, is that orders are being delayed. Suddenly there's a downturn or a recession, and then the sentiment changes for the oil and gas space. That might lead to orders being delayed, or rather less orders being won in the future. So I think a recession would be a key factor or key risk for this stock globally. But other than that, we do think that the sky is quite clear and bright for them, especially for its outlook. At this current point. Yeah.
Okay. Thanks, Jarek. Clear skies for Dyna-Mac. That's something to take note of, especially when we are doing bottom-up stock picking. Now, thanks, Jarek, for joining. I want to bring in our Thai consumer analyst, Sutatip, at this stage. Now, Sutatip's written a very interesting sector note forecasting that Thai retail sales will see a healthy third quarter. We are going into results season. So Sutatip, welcome to the show.
Hi.
Hi, good to see you. I want to ask you, Sutatip, what's kind of driving your view on the third quarter outlook at this stage?
Okay. Actually, if we look at the same-store sales growth in the third quarter, it's quite weak compared with the first quarter and second quarter of this year. But this is because of the seasonal impact, more rain, and also high base effect of last year. But if we look at the bottom line, we estimate to see the healthy bottom line, earnings in the third quarter of retail sector because of the store expansion still help boosting the sales, and also we should see the improving profitabilities based on the higher portion of the high margin mix of the product, and also the lower electricity expense. So we expect the retail sector earnings in the third quarter to increase around 8% year on year, led by CPO, which should be the company that posts the strongest earning growth in the third quarter, that we estimate around 15% year on year earnings growth for CPO. And also BJC should also post the strong growth of around 12% year on year as well. Except
right. Thanks for
global, except global that should post decline earnings because of the low purchasing power in the Northeast, where global has quite a lot of stone there.
Right. I want to expand on CPO a little bit later on, but I just want to talk about last week we saw a very unfortunate mall shooting in Bangkok in a very prestigious mall. So how are you thinking about retail sales going into 2024? Will this have an impact, or should we see more upside to retail sales going into 2024?
Okay, I believe this incident will be slightly negative for retail sector. Yeah, I have to accept that, because if we look at the tourist sales of retail sector, it's represent around 3 to 9% of the retail sales. But however, we expect to see the more stimulus from the government, and also the lower energy price should also boost the domestic consumption next year. And also in terms of the retail company, they still continue to expand the store and also increase the contribution of the high margin product. And this will help boosting the margin of the retail sector as well. So we still expect the retail sector earnings to grow around 18% next year.
Right. So you might have some short-term negative, but especially with stimulus coming in from the government and more capacity being added by the companies themselves, you should see growth going into 2024.
Right.
Now, you have CPO as your top pick. We've got the chart up on screen right now. Maybe talk us through your main 2-3 points on why you think that CPO is better positioned than most of the other retail stocks.
Okay. I still believe that CPO as a market leader in the both 3 segments of the retail sector in Thailand. First is convenience store under 7-Eleven. Second one is the wholesale under Metro, and another one retail business under Lotus. These 3 is the market leader in Thailand market. So we expect to see the domestic consumption recovery, and CPO should be a prime beneficiary from the recovery of the consumption. And also, if we look at the 7-Eleven performance, we also see the upward trend of the customer traffic after the reopening, and also the gross margin increasing as they adjust the selling price and also move toward the high margin sales as well, and lower the budget product. So the gross margin also improving for 7-Eleven, and also it's subsidiary CPX that include Metro and Lotus. We expect to see the improving earnings performance as well, as they just finished the debt refinancing in the second quarter of this year. So we see the lower interest expense from second half of this year onward, and also benefit to the next year as well. So we expect CPO earnings to show the strongest growth in among other retail sector this year. We expect to see a 32% earnings growth this year and another growth of 23% next year for CPO.
Great. Thanks for that tip. I want to remind the audience that CPO is a stock that is listed as a SDR on SGX. So there is a direct and easy way to play the Thai consumer sector through the CPO SDR. Interestingly, we have an event that is coming up on the 11th of October, where we will be discussing a lot more on investing opportunities in Thai SDRs as well as Singapore SDRs that are going to be listed on the Thai stock exchange as well. So please do speak to your salesperson and join that event. Thanks, Ratip, for joining our show. Now, before I go into our other events, I just want to quickly touch on what our macro team is saying. I think that's quite important, especially this week. We've got the US economic strength coming through quite strongly. We've got the Middle East conflict. All of these are going to tie the hands of central banks a lot more than what we thought even just a week ago. And I think they will be constrained in terms of how they view in terms of easing, especially looking at how oil prices are going. So I think you might see another sort of cycle of inflation coming through as well. So we think, and this is going to be the case for the MAS as well here in Singapore. So we think they will keep their Singapore dollar appreciation policy in the mid-October meeting that they will be going into. Now, having said that, Singapore's growth is also stagnating. Third quarter GDP is expected to be quite weak, particularly with the sort of tepid China reopening that we are seeing, as well as some of the weak manufacturing numbers that are coming out. So there may be around a 20% chance that they might ease the Sing dollar appreciation a bit, but I think most of these probabilities were calculated before the conflict of this weekend. So I think that the chances are actually a lot smaller than that. But the good news is that we may see the Singapore government coming in to do more heavy lifting in terms of providing more fiscal stimulus and fiscal support, given the fact that their revenue growth will most likely exceed what the Ministry of Finance has been forecasting for 2023, 2024. So they do have a bit of space around there. We did see some support coming through over the last couple of weeks, so we may see some more of that coming through as well. Now, we are mindful of time, so let's just go into the events that are coming up. Key announcements is on the 13th of October, we will have the GDP numbers for third quarter coming out for Singapore. And then we have a whole host of results. We have Keppel DC REIT on the 16th of October, Keppel REIT on the 17th, and we have Keppel Corp on the 19th of October. We have Sabana REIT on the 18th of October as well. But apart from that, we do have on the 18th of October China outlook and strategy with our partners, Haitong Securities. So please do speak to your salesperson and join that meeting. And as I said, we have investing on SDRs coming up on the 11th of October. And we also have a group meeting, corporate access for Sun Power Group, as well on the 17th of October. So please do, scan those QR codes or speak to your salesperson to join those meetings. Now, I'm afraid that's all the time we have for today. So thank you very much for joining us. I will not be around for the next couple of weeks, but you will have some very special guest hosts hosting Market Mondays over the next couple of weeks. So please do join us to find out who they are. With that, wishing you a profitable trading week. Thanks for joining us.